Great. So welcome everyone to this next edition of the DueDash Investor Lounge. I'm Michael, with the co-founders in DueDash. And to give you a quick introduction to us and why we're doing VC events in the first place, DueDash is a startup investor relations platform. As you might all know, this is a difficult time for many founders, but also investors, trying to find the right deals for startups, raising funding. And I mean, you even see titles such as Bloodbath and fundraising and other martial kind of feeling titles. So it's a difficult time for founders to raise funding, to build the trust of investors. And often the issue is there's a lack of really proper data for investors to judge a founder and a startup, but also the processes behind that, to build that trust, and from where on actually go through a seamless due diligence, follow up, and from where on actually get investment. DueDash was built to cover that whole investment process, really from beginning till finish. And if you are either fundraising, you have to manage investors, follow up, reporting, you should come on DueDash. Same if you're an investor looking for startups, you want to help your existing portfolio companies make your process more efficient. DueDash is a platform for you. And as part of that, we also do these regular sessions to educate, to inform, and also help both founders and investors to take the next steps. If you're not on DueDash yet, please sign up on the platform. You can do it under DueDash.com. We're also supported by a lot of amazing partners, VCs, accelerators, incubators, syndicates, but also software partners who share our vision and work with us to really make startup investments more democratic and more transparent, and also ensure that we come into the future of data-driven investor relations. We also usually do a quick survey to get to know you, especially if you need any support. Might you be a founder looking to raise funding, connect with investors, improve your investor relations, or you're looking for a relevant deal for an investor. Just fill this quick survey. You can take a quick photo of that. And otherwise, I will also drop the link to the survey in a second in the chat when you guys get started. With that, I will be here in the session. So if you have any questions about DueDash, anything else that we do, you can always write them to me. And before I give it, of course, to our host and our guest, keep sure this is also an interactive part of the session. At the end, we're also happy to hear your questions, your input. So feel free to already think about what you want to ask our guest today. And with that, let me just stop that and put Parul and Jet here on the podium. And I'm going to take myself away and give it to you, Parul.
Thank you, Michael. Welcome, everyone. Good morning, good afternoon, good evening to everybody. I know people are joining from different parts of the world. Those of you who don't know me, I am founder and CEO of DueDash, which is an investor relations platform, which Michael very nicely just introduced to everybody. Our goal is to save time and money, whether it is startups or investors, by sharing standardized information and covering the entire process through due diligence and portfolio management. My background is that I'm a serial entrepreneur, those of you who don't know me, and I've built multi-million-dollar companies and invested privately in many startups for more than 15 years, have experience in M&A, basically the whole shebang. And I'm today really excited to be here and welcome Jed, who's joining us from Singapore. Jed is an MBA with over a decade of experience in oil and gas, and he transitioned into startup world, played a pivotal role in founding many businesses, including API Marketplace, which I'm sure a lot of you have heard is Rapid API, which has since become a unicorn. And not only as an entrepreneur, he's also a savvy investor. He boasts an impressive portfolio with significant exits, with the latest exit acquired by Dolby. And he has a growing syndicate of over 1,000 LPs. Jed has demonstrated a remarkable ability to identify opportunities, consistently achieving tenfold returns in just 3 years time frame. And his journey basically has led to creating some consistency with averaging about 6 investments yearly, efficiently managed through SPV. And I'm really excited to hear, and as he will be sharing his insights and journey in entrepreneurship and venture capital. So thank you so much for joining us today, Jed. Tell us about the moments that led you to become an angel investor.
Hey, first of all, Parul, thank you for the invite. It's a great pleasure, and it's nice to meet all of you. I think my journey into angel investing comes from all the amazing startups that I've had the opportunity to work with. And I do believe that people are naturally drawn to this asset class out of intellectual curiosity. That was certainly the case for me. Probably we can agree that there are easier ways to make money. But those of us who do this, we clearly get drawn to it, for an intellectual challenge and to want to do things beyond a financial return. So that was basically what triggered it for me, right? I was working with startups. I saw amazing work being done, and I wanted to do my part into capitalizing these companies. So I put aside some of my own balance sheet capital, invested personally, and despite being self-taught, it's worked out okay for me.
Awesome. That's amazing. So as an angel with your angel syndicate, you do not have to adhere to a typical 10-year VC cycle. Can you give us some insights into how your network is different from VCs and accelerator programs, and what value do you bring to the founders?
Yes. So I think if you think about venture ecosystems, right, the sources of capital and the help that startups get, there's different resources. One is accelerators, venture studios, incubators. These are about getting the companies ready to go to market, to help with that in order to be fundraising ready. When the startups go out, where do they get money from? Earliest money is angel money. Tends to be, 5-figure checks on average. And then there's this giant leap to getting your Series A or an equity round, which is like VC capital, which is like a mid 6-figure to 7-figure check. So I'm of the view that syndicates fit very nicely in this middle, right? Somewhere in between like the 4 or 5-figure angel check, where the startups need to like go after each investor one by one versus like the 7-figure VC check, right? Because typically syndicates would be writing that 6-figure check. They get a significant amount of capital from a single investor with a clean cap table, right? So that's kind of like the benefit. And I think the syndicate vehicle also has a lot of value for the investors who are part of the network, right? If you think about being an angel investor, writing a relatively small check, how much access, how much due diligence can you do, right? There's only so much time a startup can be spending with you, to be fair. Or you might be very limited by the stages that you can get access to. So I think like syndicates have this function of, because we're aggregating capital, you can get into a better source of deal flow, right? Just a larger opportunity set, and creating access that way. And so it's a very good relationship, I think, with the syndicate leads and the angels versus thinking about the VC funds, right? For most angel investors, it's not something that's accessible, right? At a minimum, you're talking about a 6-figure check up to millions, right? There's not that many angels that have that kind of a capacity to play.
Gotcha. I know it's a great way, it's a great platform to bring accessibility to angel investors and giving them the tools to, go through due diligence and have that comfort that there are other people who potentially are experts who can evaluate a deal and they can probably join in. So tell us a little bit about your network of where your deal flow is coming from.
Yeah, I think that for what we do, a lot of it is driven by relationships, right? We could be investing in sending things to Mars, but fundamentally, the relationships with founders and the relationships with other investors, it's personal bonds, right? And it's trust and credibility, and all of these things. So to your point, where do we get deal flow from? Basically, the answer is our network, right? That the bigger that we grow, the more deal flow that we see. It increases the opportunities, and the better we're positioned to capitalize the startups that we come across. So as an example, the latest deal that I closed just last month, we wrote a 7-figure check, our first 7-figure check. We led the round and we had a VC follow us, in fact. So as far as syndicates go, I don't say this as to boast or anything, but we are pushing the upper limits of what people think of when they think about angel networks and syndicates. And despite being this size, I don't think we've hit headroom. Like we can still grow, right? I'm fully confident of that.
Yeah, I mean it's a very valid point that you made, and congratulations for leading that. I see, I mean, quite a few angel syndicates have grown, especially in the COVID times, and definitely some of them have a much better structure than the others. So definitely kudos to you for building that, and many congratulations. Can you share a little bit more about the process of your deal flow selection? Because there are different types of angels, and I'm sure you have a specific type of companies or specific investing lens that you potentially have when you seek for whether a product, or maybe you also seek some external validations for your deal flows or investments. Can you shed some light on that?
Yes. So we've developed our own frameworks and models and mental models for evaluating startups, right? There are things that are quite conventional and what you would expect most investors to go through. We look at the market, we look at the business model and the unit economics, and potential dilution and valuation and the team, and all of these things that you would expect. I think where the real secret sauce is, there's a couple of elements that, okay, fine, you could have an investment framework that guides your decision-making process. Now, we can't really implement that full analysis unless we can bring capital to bear, right? Again, going back to the point of how much time can a startup spend with you if you're writing a $10,000 check or $20,000 check? Just not that much, right? They've got a big round to fill. So capital is an important part of the equation because it lets us go really deep and to ask the meaningful questions and get to those like aha moments. So that leverage is important. The other part of it is that you can go through a framework and come up with an analysis, but actually, how do you know if the decision that you've made is good or not? Right? If you've done it in isolation. And here again, I go back to our network. I've got a trusted network around me of people who are passionate about angel investing. And before any deal goes out, I share it with this trusted network. A few people. It's almost like doing an exit poll before election day, right? You just want to find out, get a sense of the pulse, right? A simple thing like preparing the analysis, sharing it with a few investors and say like, hey, tear this apart. Where did I go wrong? Like, am I like too in love with this? Right. And just getting a few data points to like challenge your thinking, right? It's just such a powerful thing. There's nothing magical about it, right? Again, but it's the network.
Yeah. I mean, early stage startup investing, company investing is anyway very, very subjective, where we have too little data. It's only passion and the excitement and the TAM. At DueDash, we use a 5T model, which we call as team, timing, traction, technology, and TAM, the market opportunity. And of course, combined with that, the financials and differentiators, the geography that kind of comes in to assess any company. And I think one of the key factors is when you are evaluating those deals, it's about evaluating the founding teams and the differentiation that they have, or just the opportunity itself. What are the critical traits that are really important for you, or some evidences that you look for? And maybe you can highlight some of the red flags, some no-goes for you.
Yeah. Well, I think statistically, repeat founders have a better track record of success, but everybody's got to start somewhere, right? So I think it's also important to give first-time founders a chance. I do, as far as first-time founders, or generally, when we look at founders, we want to be backing founders who understand the problem space that they're working in, right? Because I don't think, if you don't have a deep understanding of that problem space, how can you actually ever build for that? And another element of it is, are these founders committed, or are they, for lack of a better word, I don't mean to sound disparaging, are they like tourists? Because building a company is brutally hard. It is difficult. I know this, I've done it, in conjunction with the investing that I do, I have a venture education business, right? What we specialize in is helping angel investors build their own syndicate. It's completely bootstrap. I don't accept capital. And so basically on top of this, I'm building a bootstrap startup on the side. And like it's just a really difficult journey, right? And not everyone is cut out for it. So the best way, you can't really tell, but the best way that founders can demonstrate that is to show a commitment and skin in the game. Like, have you put in your own sweat equity, your own capital, your own time and energy to build something and validate this before you seek funding, right? Just because, well, frankly, like pre-seed shouldn't be an excuse to say like, well, we haven't done anything, right? That's a completely different distinction.
Sure. I mean, it is definitely, all of it is valid, and building a company is extremely hard. We know that. And even though, there is a lot of accessibility and, reduction in certain costs, but, go to market is becoming increasingly difficult for a lot of companies. And you touched upon earlier a very important point, which is funding is a significant enabler for growth. So, talking about some numbers, I would like to ask you some pointed questions here, like in terms of how big a check size do you write, and are you planning to increase the number of investments? I mean, I know you average at about six. Is six the right number, or what is the logic, or some arithmetic behind it? And adding on to that bundle of questions is, how do you or your network can potentially assist in startups in securing investments for their future rounds to support their expansion plan?
Yeah. So our average check size on a pre-seed, we might write 100 to 200K check. Seed to Series A, we probably do about $500,000 up to $1 million, right? And this is the current state today. We're going to continue growing. Give me a couple of years, I'll see if I'm at 2,000 LPs and writing $2 million checks, right? I think we can get there. So this is where we are at. So we're writing significant capital, certainly bigger checks than a lot of like smaller funds. Now, the deal flow that we do, my optimal deal flow is maybe 6 or 8 deals a year, right? So let's say one every 2 months or so. We've actually pulled back on the deal volume from last year and this year, like many other investors, just because we can't assume that capital will be freely accessible. And so the risk threshold has gotten a lot lower, right? That's just the reality. It's not fair, but this is like the state of the markets. And so from our lens, especially as a syndicate, my fiduciary responsibilities to the investors in my network, that when I put out a deal, it's a company that I believe can be successful. So yeah, so I mean, I currently plan to stay with 6 to 8 deals. That said, right, we are mainly US centric investors to this point. And as we grow, we're starting to create new hubs. We just started looking at deals in Europe and also in Asia. And the plan is that, hey, with our big network, we can segment things out or people out and say, if you want to look at European deal flow, right, just opt in. And then when I have a deal, I'll share it with you. Same in Asia, right? So using that model, it becomes another way to scale. Like we could write a 6-figure check tomorrow into a European company. We found the right deal. We had conviction over easily. And then so that becomes a vector to grow like the deal volume potentially.
Gotcha. So that's awesome, actually, going up to 2,000 LPs. So that's definitely, I'm going to track you on that and keep it up.
To be honest.
Another 2 years or 3, or maybe less than 2 years, I don't know. So how do you engage with investors beyond your current network to cultivate lasting relationships and potential follow-on funding opportunities? And it's a continuous expansion and nurturing of the network. So what are some of your, I know it's trade secret, but maybe something that you are comfortable sharing?
Yeah. Certainly once we are in on a company, we are fully behind them, right? Once we make that decision to go back them and fundraise for them, we are completely aligned with the founders to make the current round fundraising a successful. We ask for pro rata on every investment. There's no two ways around that. So, which gives us an incentive for helping the companies raise the next round, right? And here, again, relationships, we're always like looking to meet other wonderful people in the ecosystem like yourself, other VC funds who can be sources of follow-on capital, set the next round valuation. And for us, we'll exercise that pro rata, not just with the existing investors, but, potentially during that time horizon, we've kind of grown the network, right? So there's another source of capital. We can kind of like double down on the company that way.
Yeah. I mean, that's really the way to go. Absolutely. And DueDash, I'm going to give a plug here. It's an investor relations platform. It's all-in-one DIY tool for streamlining the investor engagement, saving up to 40% of the time the data rooms, updating to investors, sourcing, all in visualized dashboards and one-on-one access controls. So users can, whether it's investors or founders or fund managers raising their own capital, they can engage with their investors in each format with direct messaging and reporting while tracking the progress. And we have, pipeline boards, contact management. So there's a lot of stuff which is going on there. And platform has little over 2,000 plus investors, and the companies can share their profiles, they can share documents and updates very, very easily. And for investors, it's a complete ecosystem from deal flow to doing their own due diligence to portfolio management. So I mean, it's pretty much for everybody who's probably here on this event today and beyond. It's free to start and using it. So whether you're a startup or investor, you can supercharge your engagements using DueDash. So I mean, it is a relationship business, like you mentioned very early on, and investor relationships are even more crucial because you're seeking funding from somebody on an idea, which is very subjective. It's still not revenue generating. And what are the metrics and benchmarks do you use to gauge the success of your investment efforts?
Sorry, could you repeat that, Parul? What is the
metrics or benchmarks do you use to gauge?
Yeah. For us, we tend to be software investors, B2B focus. And we tend to play at seed to Series A. We have done pre-seed deals, but certainly nothing that's like pre-product, pre-revenue, right? We play in this space because we believe like these businesses are affordable enough to build that capable founders should be able to bootstrap something before raising external capital, right? It's not possible with a lot of sectors, but generally speaking, with software, it is. What do we look at? Well, there's the standard things like ARR, the recurring revenues. We look at net revenue retention, and we benchmark these things towards top quartile growth rates, right? For me, a decent software company, early stage, sub 10 million ARR should be growing 3x year over year minimum. Given the current fundraising climate, we are also indexing or looking at burn efficiency, right? So how much capital or how much cash is a company burning every single month to earn net new revenue? It's difficult. It's a fine balance now when funding is scarce, that the growth is managed carefully, right? And profitably, because otherwise you'll grow too quickly and maybe you hit, you just run out of cash and then you can't raise and then you're done.
Yeah. So I'm going to ask you a question around, things we hear every day about the global challenge of climate change, sustainability, mobility, renewables, and do you support this mission any way? What's your take on this?
I do, absolutely. It's probably the single most pressing generational problem that humanity will face for us going forward. Now, that said, I think you are only going to create meaningful solutions with viable businesses, right? So let's take an example like sustainable proteins, right? Instead of animal proteins, what are your alternatives? There's soy-based products, the Impossible Foods and Beyond Meats of the world, and then there are more frontier efforts like lab-grown proteins that are supposed to like mimic the actual like taste and texture of real meat. If you look at the latter category, I'm not an expert in this, right? But just cursorily reading the cost of development and the pace of progress, it's very hard to see a case where the breakthroughs happen, in a way that this becomes economically viable. And if it doesn't, it's very hard to justify it as having like a place and as a legitimate, substitute for animal proteins.
Yeah. I think there's a lot of work going on, and I think we'll definitely see a sea of change coming in our eating habits and also how and what we will shop in the supermarkets. It's already changing. I mean, in Europe, I can say there are 40% of the shoppers today buy vegan products than meat. So there is a big shift in millennials, especially. I'm going to ask you some quick rapid fire questions for you to answer in short sentences, 1 or 2 sentences. Are you ready?
Let's do it.
Okay, so a great 1 minute pitch or an introduction should contain certain elements when talking to an investor. What is the most important pitch elements for you?
Yeah. Number one, make it dead easy for me to understand what the company is, what the company does in one line. And second, tell me something differentiated and interesting.
So according to you, which vertical has the most potential currently and why?
Ooh, this is tricky. I not to give a cliche answer, but I will say like AI will shift and create a lot of value and change in the ecosystem. The challenge when there's so much noise out in the market is to say like, how do we actually pick the winners?
What are some of the latest trends and technologies that you're watching and feel strongly about other than AI?
Other than AI. So one thing, so I'm a big believer in future of work thesis. Like, what does that look like? I think we're seeing a generational shift in how like millennials and Gen Z like perceive their relationship with work, right? So that's a very big thing that's happening. The other one that I think is very interesting, and there's a big prize for whoever manages to solve it, is actually SaaS bloat. We all have like way too many accounts, way too many tools, too many things that we're paying for. Whoever can solve that beyond, I guess, a typical aggregation play or integration play to multiple SaaS products, I think that's also worth solving.
Yeah, definitely. I just canceled 8 of my subscriptions on content OTT platforms on the weekend. So definitely, totally for it. Which geographies do you think will lead the way for new ideas in the near future and long term?
No. I think that for the next decade or two, we will see the US still continue to like lead on like cutting edge innovation. The other opportunity is on emerging markets who are going to do technology leapfrogs, right? They don't have a legacy of a certain generation of technology that, pegs their thinking. They can actually jump and shift. That would be very cool.
So how do you ensure your angel investing process remains adaptable and relevant to emerging trends and technologies?
I think the skill of being an investor is something that is learnable and transferable across sectors. So being disciplined, having a framework and sticking to that process, is important. The other part of the equation is when you're starting to look at new sectors, new verticals, it's important to be able to access expertise to help get into that space, right? To complement our knowledge, which is going back to our original discussion around the power of networks.
Absolutely. Share one craziest idea that was ever pitched to you that pops in your mind right now.
Craziest idea that was ever pitched to me. Oh, there's so many. Distributed computing using endpoints over a web protocol. Basically, like, hey, could we not rely on AWS so much and use spare infrastructure like people's desktops and laptops? I think it could be very interesting, but ultimately, that I don't think the technology is ready.
No. Okay, interesting, definitely. What's your take on generative AI?
It will create a lot of value for a lot of industries. The ones that will be disrupted or the jobs that will be disrupted are things that are standardized and repeatable. That said, like all hypes, and I'm not calling AI a hype necessarily in a pejorative sense, but the gains would take longer to materialize than we expect, as always.
Why should investors invest in startups?
You invest in startups because not just for financial return, but if you believe in the mission of what they're doing, do it for the right reasons. You might lose your money, but you could come out also very well. I think along the way, it makes you a smarter, more educated, well-rounded person. And one of my favorite things about what I do is that I can talk to 5 companies a day and be rather clueless about all of them. And I walk out a little bit better. And I think at the end of the week, the gains add up.
What qualities do you value the most in a professional relationship?
Trust and authenticity.
Very important. Who was your childhood inspiration?
My childhood inspiration.
Yeah.
I did not look up to a lot of people when I was a child. I think I'm a bit rebellious that way.
Okay. Creating your own path, not a problem. What drives you when you get up in the morning?
The next deal that's going to be a big winner.
What are you currently reading?
Mostly pitch decks and data rooms.
Okay. One leadership lesson that, in your view, is invaluable, be it a startup founder or as an investor.
Park your ego, learn to be vulnerable, and admit when you don't know something, because it's okay. People
Awesome.
will respect you for it.
Yeah, that's really, really a very genuine advice. So what advice would you give to other angels? I know there are a bunch of angel investors on this event today who are looking to establish perhaps their own syndicates or angel networks based on your experiences and insights.
Yeah. I think if you want to be a serious investor, a serious angel, it's not for everybody. Some people are happy to write checks, but if you really want to go to the next level, building and managing a syndicate is a fantastic way to do it. It shifts the risk reward in your favor so dramatically compared to being an angel investor. It's not even a comparison. Okay, add to that, think about the syndicates actually have a structural profit advantage over VC funds in the way that carried interest is calculated. Right? We don't have time to get into the details, but it's there, it exists, which is why kind of like small scale funds just don't really make sense. So if you are an angel investor, you're really serious about this, go do it. think about doing this, and if you're very serious about starting it, then reach out. I would love to like have a chat. I will even send you a free ebook about how to get your angel syndicate going.
Awesome. I think I should talk to you because I need to take it back to my GP, but obviously that doesn't make sense. We need to learn here something. But jokes aside, let's finish with an outlook for future of venture capital with respect to tech in general and a climate tech industry, which we touched upon earlier on. So how rapidly do you think it'll mature?
I think not rapidly enough. I think the world is not reacting to climate change and sustainability in a way that we should, clearly. And I think that will pick up. And I hope when it does, it's not too late. But when the sentiment follows, I think the capital will as well.
Okay. So Jed, if you were to give one piece of advice to young Jed, what would that advice be?
Take more risk early because the cost of failure is never cheaper than when you're younger.
Absolutely. I can double down on that. So we're going to take audience questions now. Thank you so much for that rapid fire. That was really, really insightful. So we have the first question from Patrick. Would you be open to discuss the investment opportunity with startups that is building a product that has well-established competitors already? For example, I'm building something that competes with SolarWinds, a Nasdaq-listed company. Basically, I'm going to build a tool like SolarWinds while filling up the void that it creates for SMBs using present-day tech stack.
I would say I don't know enough about SolarWinds to have an educated answer. So I'll have to like refrain, but sure, I'd love to learn more. Reach out, Patrick.
I think I would just like to add, because you mentioned earlier on that you look typically for something which is out there and making some revenue. So if you are at the right stage where it's relevant for Jed to evaluate, so definitely. So you feel free to reach out to him. He's on DueDash, and he can definitely assess your data room and reading your pitch deck there. So the next question is from E4S Tech. It's a German company. How would cooperation look like in terms they are currently raising seed round and looking for $500,000? So how would a typical syndicate investment look like, and how does that process follow? They are on DueDash platform, by the way. I can just inform you that, Jed. So should they probably reach out to you directly, and then you can basically start reviewing their data room and something like that?
Yeah, I generally, yes. I'd say I want to address a question that Marco, or a comment Marco made. He asked, okay, what would a typical syndicate investment look like? It does vary by the size of the syndicate. And so if you look at the past deal history or just ask them what their average check size is, you will get a decent enough range. What would it cost? I'm not a big believer that, me personally anyway, that syndicates should be taking fees for doing the raise, right? So in the end, that capital comes from whatever LPs contribute, right? So you take it from one side or the others. They shouldn't be fees to the startup. So
Gotcha.
if you are going through this, then it's something to be aware of, Marco.
Yeah. Okay, Marco, if you have further questions, feel free to reach out to us and we can definitely facilitate any further conversations here. So the next question is, any interest in life science or biotech sector as well? Do you invest in the sector?
I don't know enough. I'm sorry, Tian. Or Nan. I'm sorry, I don't know the space.
Yeah. Okay. So, but we do have some other investors in this space, so we can also have a separate conversations. Please feel free to reach out to Michael, and he'll be able to assist you on that. Jed, the next question is that you shared your focus is mainly US, and now you're looking after, you're going for European and Asian deals. In which is the best city, in your opinion, the best place to start a startup today, both from investment and business perspective?
I think if you look at the order of the world, like I just moved to Singapore about 5 months ago, right? Now I've lived in different places around the world, so I've seen a little bit. If you look at venture ecosystems, like the US being a single market, single currency, single regulation, going to continental Europe, which is common currency, kind of a broad one single legal framework, but not really, because every country has their own rules and regulation, towards Asia, where you've got different currencies, language, culture, all of these things, right? The difficulty actually kind of magnifies, right? So I think generally what we look for on companies, like, look, that being in big markets matter. Like, you can start out wherever you want, but having a big addressable market, or if not now, then a plan to get there, absolutely matters. And where you go, it's down to the service and also, or the product that you're building, and also the local conditions, right? I don't want to sound like I'm super US centric and blah blah blah, but there is a reason, that it's easier to get things done in a way.
Yeah. And also there is a certain maturity in the market. I mean, venture capital is 70 years old there. People are familiar with that. There are the sheer number of the investors that exist is just phenomenal.
Correct.
Compared to any other geography. One language for any product makes a lot of sense as well.
Correct.
And it's transparency at the end of the day in the system, which is structured and it's clean and it's fast. It's what is it called? It's an economy which is market driven. So in a market driven economy, contracts are honored, and that's what it allows for a much bigger geography and has that maturity. So I think that's what sums it up. A great answer there.
I think just to kind of make one more point, like you think about, the opportunity in continental Europe versus like in Asia. Like, I'm in Asia and I'm still trying to wrap my head around this, right? Because, country expansion within Asia is like setting up a whole new business. There's local regulation, language, currency, culture, all of these things. You might need to change your business model, right? So the challenges is magnified, at least fivefold, I think.
Absolutely. So the next question is, I'm assuming somebody considering angel investing, what are the three main things that an angel investor needs to look at before plunging in any investment into a company?
It's more than three things, really. I have a checklist of things that I look at in a data room, right? So beyond the company and the pitch deck itself, I want to know their capitalization structure, their cap table. We want to know what vehicles they've raised capital on, because those things affect dilution. So it's more nuanced than, I think, three things. I wish I could give like a tight, a neatly packaged answer, but a lot of these things, they can like affect the calculus. It can change something from a go to no go because the company used a pre-money save versus a post-money, for example.
Yeah. And I think the capitalization structure kind of is a good tell sign. What is the maturity, how it is set up, what is the transparency? Can you talk to all the founders, or is it one person who's dominating the conversation? On all of those nuanced things, like you mentioned, that's kind of mattered a lot in having, checking the signals. What are the signals you're getting?
Correct.
So
I think to your point, actually, like talking to the founders, like, are the founders willing to have a conversation with you and just like kind of share their vision, or are they looking for a quick check? Right. This is, in the end, investing in a company is a long-term relationship. It's not, it's not a date or a one night stand. I'm not trying to be crude, but it's a long-term relationship. And so we also look for founders that, are they invested in building this relationship with us? Because if they're just looking at us as a checkbook, I'm not in this, I'm not feeling it.
Yeah, absolutely. The next question is, Jed, are you open to invest in AI products? I think you already answered that, which is yes, definitely. feel very strongly about this place. So feel free to set up your profile if you haven't done that. Set up your data room because that's something very important for Jed before you reach out to him. So the next question is, I think it's an important question. What is the right time to open up our ideas and start reaching out to investors to establish or nurture the relationships with investors? If internally we are pre-seed in our mind as a company and we own the idea, are there any I think the second question is, are there any best tools available to evaluate the idea or the MVP? Their company is in AI. They're doing something in healthcare using AI.
I think that it's good to develop investor relationships ahead of your fundraise. There are strategies and tactics to do this. For example, if you're kind of building an idea and you find some, in this case, AI or healthcare investors, and just say like, hey, I'm not here for a fundraising conversation. I just want your input as an investor to talk about my deck and my idea. And that's it, right? That can be a way to actually pre-build an investor list prior to the fundraising. So there are techniques like that. Don't be afraid to ask for help. Don't underestimate investors' egos. It kind of is a thing, right? If you approach to somebody who you think they can really move the needle and say like, hey, I need help with this, I think you'd be really great as an advisor. Be intentful with it and have a proper advisor agreement. These things can work in your favor, right? Ahead of at a very early stage, right? Ahead of the fundraising readiness. And then as far as available tools to evaluate the idea of an MVP for AI in healthcare, I don't know. That is very specific. I don't know enough about the business that you're building. But again, this is a people business. Reach out, talk to people, share your idea, get feedback, and then just keep going.
I think market research, and there are a lot of services out there which provide not only the reports, and I'm sure you have to do your TAM calculation. So I think the research in that will provide you enough input. What is happening in this space, and I don't know specifically what you're trying to do, and I'm not going to pretend here that I know all the answers. I'm just trying to help you because the question is pretty broad. With your market research that you're going to do just to assess your market opportunity which you're going to present to the investor, for that you will be able to figure out what's out there, talk to people like Jed said, which is very important, and building relationship, nurturing those relationships with the right set of people very early on. I think that's meaningful, and you need to figure out how far you want to go with sharing your idea. If you think there is some proprietary in it, there is some really secret sauce in there. So that's a skill of a founder, really, to communicate that. You have to excite them, but at the same time, not give too much out. So that's definitely one of the biggest skills that founders have to learn. The next question is, do you have any interest in consumer tech, and what traits do you look for in your founders?
Yeah, consumer tech generally not my space. I think I'm a terrible consumer. I don't buy stuff, so I don't get it. I don't understand why TikTok exists and people need to dance to videos, but maybe I'm just old. And what traits do we look in the founders? I think again, we talked about this already, right? Just serious founders, committed. You can say that, but it's very hard to demonstrate. The easiest way to do it is to show skin in the game. Build something, put yourself at risk, sweat equity. All of these things do matter, and they move the needle.
Yeah. I mean, what would be a typical sweat equity or some, real financial investment? What ratio do you look for founder to have done in ideal cap table in your point of view?
Yeah, really, really hard to say, right? It does vary a lot on the business. But I think the time that they've been working in it and what they've achieved in that time and the validations, which basically help de-risk the business. Qualitatively speaking, that's what we look for. I don't think it's down to an absolute dollar number of how much personal capital they've invested, right? It's just more generally looking at the effort and the commitment.
And do you invest in like full-time founders, or is it okay for you if the founders are working part-time on the startup?
For us, full-time founders.
Yeah, I think that's one of the biggest filters then. So I think there you go. You have your answer there,
Good
Joanna.
call.
Okay, I think there are no further questions coming through. I mean, it's been great talking to you. It's been fun talking to you. I know you're on DueDash platform, and I think the founders will definitely reach out to you. And I think all the founders out there, you know what you need to consider. Make sure your profile is complete. Make sure your pitch deck is up to date and your data room is ready for Jet to look at. And when you pitch, make sure the ingredients you said in the quick pitch, that tell me your differentiator, tell me how you stand out and where is the opportunity. He'll definitely look at you. And I know, Jed, you'll be able to find some amazing startups on DueDash. I'm looking forward to building our engagement there. And all of you who are there, if you liked it, please share it out. We'll be posting this on LinkedIn as well as on many other channels out there. So thank you so much for joining in. It's been a great event today, and looking forward to the next one. Thank you, Jed. Thanks for your time today.
Thank you, Parul. Thank you, everyone. Have a good day.
Have a good evening. Thanks. Bye.